Hey, this is Matt from InvestiQuant. Today is Thursday, June 3, 2021. The markets have been trading sideways here for several days. In the overnight session, we are seeing weakness come in, and we are currently trading below the lows of these recent trading sessions. So that's a study that we can look at here within Discover, and that's what we will be looking at this morning. The study specifically is going to be looking at opening below the lowest low of the prior 5 days when in a bull market environment. So let me set it up. We've got all four instruments included here. The setup's based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time. The exit set to the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, to set this up, we're going to use one simple filter from the opening filters library. It's within this opening area category, and it is open below the lowest low of the prior 5 days. So if I scroll down just a little bit, there's a bunch of different options here in this opening area section. I'm going to hit equals next to open below the lowest low of the prior 5 days. So that is looking at opening below the lowest low of the prior 5 days. And I'm going to go ahead and add gap direction, gap down here, just to make it obvious what we're looking at. This is a down gap. I don't really need that because by definition, if you're opening below those lows, then it is a down gap. But just to put it in there to make it obvious to those of you watching, this is a down gap, and then we are looking at a market environment that has held up fairly strong. We've been consolidating up near the all-time highs, so we are still above 10, above a 200-day simple moving average as of yesterday's close. So now I've added both of those, and now I can hit view results. All right, and here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time and exiting at the close, which is 4:15 p.m. Eastern Time, when you open below the lowest low of the prior 5 days and you are in a bull market environment, meaning that you closed above the 10 and the 200-day simple moving average in the prior session. Now, just for reference, those of you trading the ES, which is the S&P 500 futures contract this morning, that lowest low of the prior 5 days is coming in at 41.80, so you would need to be opening below that. We're currently trading around that area. We've been below it here just recently, so not sure if we'll open there or not, but that's what the study would be based upon when looking at the ES. But let's take a look at the results here. We've got 24 samples in the S&P of this taking place dating back to 2003, 21 samples in the NASDAQ, 26 in the Dow, 18 in the Russell. Win rates on these are skewed a little bit to the upside. So you've got the S&P coming in at 71%. The NASDAQ, 71% as well. The Dow, 58%, and the Russell, 56%. So NASDAQ and S&P have been a little bit stronger in this scenario. If we look at average win and average loss, they're pretty similar there in the S&P. The NASDAQ has a little bit larger average loss. For the Dow, the average win is larger, and for the Russell, the average loss is larger. So we're pretty mixed on the average win versus average loss size there. But when it comes to win rates, they have been a little bit more skewed to the long side. So this scenario has resulted in green daily candlesticks more often than not. So hopefully you found that helpful. Good luck today, and we'll see you next time.